we want to talk about this story because if you take a look at Palantir shares, they're down about 4% this morning. This after they plunged yesterday, closing lower by about 10%. So 4% this morning, 10% yesterday. The stock down again, as we just mentioned in the pre-market. Now, we told you earlier that a regulatory filing on Tuesday night revealed that CEO Alex Karp had adopted a new trading plan. That seems to have been what tipped the stock. That would allow him to sell nearly 10 million shares of the company's stock in the next 6 months. That is true. But I want to explain what's happening here because I think it's only part of the story. Now, in the same filing, the company said that Karp had canceled a program that was put in place in 2023, a plan that would have allowed the sale of nearly 49 million shares. Now, last year, it's a little complicated, Karp sold 40.7 million Palantir shares. He already did that last year. So the new plan appears to add only about 1.8 million additional shares to Karp's 2023 share sale plan. So it's more, and obviously the dollar value is a lot more because Palantir has rocketed up. But to the extent that people were looking, I think, at the initial filings and looking at those headlines saying, oh goodness, Alex Karp is selling 10 million shares, and not necessarily recognizing that he had a plan in place where he was selling a lot of shares last year too. It's just worth trying to understand the dynamic here of what's really happening.
Normally, because it was some pretty decent volume, normally people in the know that are able to sell that many shares would have known everything.
And maybe they did. And maybe they did. And maybe they just say, look, this, you know.
Dilutive. Yeah, right.
Well, there's by the way, Palantir does a whole sort of stock option program. There's a separate dilution question that's hung over this stock for a very long time, just in terms of how many shares have been given to employees.
Is it as simple as a CEO selling?
I think it's a little bit of a diamond hand story, if you will. Meaning this, I don't want to say there's a meme stock. It isn't a meme stock at all. But
he's supposed to hang on to it, and he's not.
I think that there's a lot of folks that they call themselves Palantirians. I mean, there really is.
There are?
Oh yeah.
Palantirians.
Palantirians. That's a thing.
Because that goes back to the Iomegans and the Prestekians.
Right, people are believers in this company.
The Tasarians.
And so I think anytime you see the leader of a company selling stock, you say to yourself, okay, should I be selling the stock too?
Right.
I think that's all this really amounts to.
Right.
Plus, as we said, you layer on top of that this Pentagon story about trying to cut the budget. But I think that cuts better for Palantir, oddly enough.
Let's get to some of the news of the day. Obviously, Jim, those Palantir shares, you know, we talked about them on Monday. They are off a bit today, aren't they?
Yeah, well, I think people felt that maybe there'd be something with Palantir and the Justice Department and the Defense Department. And this is an important thing, Dave. Palantir does have a lot of business with the Defense Department, but it is not dispositive to all of Palantir's business. But there are a lot of people who felt that the cuts in the Defense Department would actually be orchestrated, or at least would have something to do with some of Palantir's views about the military-industrial complex. And we didn't hear anything like that. At the same time, we got this report, obviously, about what Alex Karp is doing in terms of selling. And it's not at all clear that there's any real change, but it's being used to say that maybe if he's getting out big, you should get out big. I think the key takeaway here, David, is that this is a very retail-oriented stock, and they don't know what to do. And that they just presume that, therefore, you take the 8% off of Palantir, too. I don't think that's going to prove to be the case. I just don't think so.
Yeah, well, and the stock was down a lot more in after hours, I believe, Jim, than it is right now. And as you point out, it was the 8% headline. Carl mentioned it at the very top of the show in terms of potential cuts to the defense budget. There are those who obviously argue that the impact would be the opposite because, of course, more efficiencies conceivably are available when you use Palantir, and therefore it would actually be used more often rather than less at the Pentagon. I'll leave that to you. But I do come back to the valuation itself, which we've talked about so many times, Jim, being, you know, a territory that is extraordinarily high and doesn't seem to allow for a lot of room for error.
Right, and that is the retail component behind it. But what you just said at the end, David, is going to be the reason why I think the stock bounced from 106 to 109, which is that perhaps this is the way that Palantir has more business. Dave, we don't know. And I think in a vacuum where we don't know, retail will initially sell, which is what we're happening. But then what's happening? But then we say, hey, maybe it'll come back. And I don't want to say yes or no to it. But, Carl, the thing is so expensive, you can't have anything go wrong.
Speaking of defense, shares of Palantir are falling again today. In addition to those fears of defense budget cuts, CEO Alex Karp adopting a new stock sale plan. Our Robert Frank has the details on this and maybe the broader picture at the company. Robert.
Yeah, Mike, a lot of confusion and debate over these numbers, so let's give them to you. SEC filings showing that Alex Karp has a new plan to sell 10 million shares this year. That would be worth just under $1 billion based on today's share price that is continuing to fall. He had about 8 million shares left to sell under a previous plan, so really this means he's going to sell an additional 1.8 million shares beyond that previous plan. So it's not like it's all 10 million are new. Now, last year, Karp sold about $2 billion worth of shares. Some of that was to pay withholding taxes on restricted shares that he receives. But other insiders, they've also been selling. Chairman Peter Thiel cashing out $1 billion worth of shares last year. And several top executives have sale plans that are still in effect. The CTO selling $400 million worth of shares last year. And the president and co-founder of the company, Stephen Cohen, he cashed out about $130 million worth of shares last year. But many of those executive plans were actually reduced. They lowered the number of shares they planned to sell. Maybe that was based on the increased share price. But guys, when you have so much of your wealth concentrated in one stock, it's natural you're going to want to diversify. And by the way, Alex Karp sold those shares last year at an average sale price of around $48 per share. That stock, of course, more than double that now, even with this drop. So it wasn't necessarily a good signal back then to get out when the insiders were selling. We'll see this time around.
Robert, for sure. I mean, in general, it's a staticky signal. It doesn't always tell you that the insiders kind of fear something bad happening down the road. I think one reason, though, that Karp's new refreshed stock sale plan, even though it didn't increase the total number of shares that much, is it did increase the dollar value of that potential sale that much relative to what he thought he was going to be selling for perhaps a year ago when the stock was less than half the price.
It's a great point, Mike, and it is an additional new plan that adds the number of shares that he is selling. So people just assumed he was going to stop at that number, 48 million number, and now this is indeed, it's not all 10 million because some of it's left over, but it is more shares than people expected him to sell before, and as you say, at a higher price. So that's a big change. And keep in mind, for context, his net worth or his total share in the company is worth about $7 billion. So he still has a lot of shares left in this company.
I want to start with Palantir, though, because it is one of the most closely followed stocks in the market. There's a big retail presence. The stock has been up a lot. Joe, it's the worst two-day performance since 2022. You got Karp changing the share sales plan. You've got the proposed cuts in defense. And all of it is coming together today to just hit that stock really hard over the last 24 hours. What do we do now?
I think what you do from here is, look, the next several days you have to sit, you have to kind of wait, be patient, and understand that the stock can fall further. Probably can fall into the $84 to $85 level. That's where it broke out. You have a technical price gap from the February 3rd earnings. In fact, at 84.85, if you have not bought Palantir, that's the spot that potentially you want to buy it. If it doesn't hold that level and it sneaks through there, you've got a bigger problem. That's probably a call to action more than anything else. But a lot of people are riding really strong gains in this stock, and I think you have to be a little bit patient here and see if this is something that plays out over the next several days.
You know, I'm thinking about the stock. Cramer this morning said the thing is, talking about Palantir, Josh, the thing is so expensive, you can't have anything go wrong. So we're looking, and we've talked a lot about momentum names that have gone pretty much straight up. And I'm wondering if there are other stocks that we need to pay attention to. I'm thinking the likes of CrowdStrike, for example, which is up 25% year to date. The forward PE is 110. The cyber ETF is having its worst week since November. These are all momentum names that we have highlighted of late. How are you thinking about Palantir and what it might mean for other names that have been really going almost straight up and now may be on their way down?
Right. So Palantir is a highly specific situation, but it's emblematic of the state of the markets. And I think it's really interesting for people, whether they own the stock or not, to just watch what's unfolding here. This is fundamentally, this is one of the best positioned companies in the world for this confluence of increased geopolitical tensions, increased budgets, not just in the United States, but everywhere as it relates to national security, and the AI trend, which clearly they are ahead of the curve technologically, and they've really become synonymous with what people think is going to be the next generation of warfare. So they've got all of those things in their favor, but it's a 528 times trailing PE. It's 150 times forward PE. What did you think you were buying? It was a $258 billion market cap at its peak, and I get it. I love watching Alex Karp be interviewed on Squawk Box. I love hearing about the innovation and et cetera, but this is a live by the gun, die by the gun type of stock, just purely based on the valuation. So when a 520 times earnings name starts selling off, it's not like the value guys are waiting and saying, okay, here is where we pounce. So it's kind of in a no man's land. It's either momentum or it's value. And right now it's in the middle. It's neither. If the momentum is gone and the value people aren't coming in at these levels. So it's tough. But if you're a long-term investor and you understand why it has the valuation it has, you grit your teeth and live through it. And if you're a trader, you're already out. You already got stopped out. If you're using any kind of risk management, you don't own it. So that's kind of the situation here. And yes, Scott, to your point, there are many names in this situation, really exciting companies, great growth rates, valuation out of control. And when they stumble, there are no buyers for a couple of days. It's difficult.
But this overall is where you want to have your spots picked. I'm sitting back with alerts on Palantir if it breaks 90, alerts on Palantir if it breaks 80. You want to be able to kind of maneuver and be flexible in this type of environment.
So you'd buy it if it drops to those levels?
I'm looking at 75 to 80 if we get there. That's a big move. I mean, 90 felt like a big move yesterday. I mean, so you just got to be able to pick your spots and be ready for it.
Got to start with Palantir. 2-day big decline. The CEO, Alex Karp, has been selling a lot of shares. It has people wondering, of course, about what's going to happen. It's down 7% today on concerns about defense spending as well. What do you do with it? It's still up 300% in a year.
Hi, Kelly. Thanks for having me. Well, I think, this news about Alex Karp, they had a $10 million plan. He has about 1.8 left. And then we heard about the cut in defense spending, about $290 billion. I think that this is short-term news, right? I think the sale is just that he's over concentrated in one stock that has made him incredibly wealthy and others incredibly wealthy, and they're diversifying. They have a unique proposition here. They're at the cross-section of AI, of government, of data and analytics. They're the premier AI defense company. They're involved with Elon Musk's XAI. He's involved with the president. I think that's a good place to be. Partnerships with Anthropic, drones. This is the defense AI company. And I think that any dip for Palantir is a dip for me. I'm a buyer here.
All right, not been a great couple of days for Palantir, and been a great couple weeks and months and years, but not a great couple of days. Palantir down 5% today, 10% drop yesterday. Palantir is down again right now, which we would call after hours. It's off about 2%. The move coming after Defense Secretary Pete Hegseth suggesting cuts will come to defense spending. CEO Palantir Alex Karp also selling the stock. But Dan, let's be clear, Palantir is still up 40% this year. It's the greatest company ever.
Ever. It trades 66 times sales. I thought the headline yesterday was a bit goofy. This is a company that maybe does $4 billion in sales this year. So whatever they're going to cut, whatever this Doge is doing, whatever Hegseth wants to do, it's just not going to be, it's not going to come from here. You know what I mean? And to be honest with you, if they're doing the things that a lot of investors think they're doing or hope they're doing, it's going to grow share with the Pentagon.
I love how you just said 66 times sales like it's nothing.
No, it is something. I mean, like, it's insanity. It's a $300 billion market cap company 2 days ago. We've never seen anything like that.
The most speculative stock in this entire market right now is Palantir. That's a data analytics and artificial intelligence company that is loved, 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 especially by young people. I'm basing that speculative crown on its ridiculously high valuation, with the stock selling for 197 times this year's earnings. And that's after falling nearly 15% over the past 2 trading sessions. Now, I am a big believer in Palantir as a decent spec. I've listened to Alex Karp, the charismatic, borderline messianic CEO, talk about how the company should be valued by the abstruse rule of 40, where you add its revenue growth rate to its operating margin. And if you get a number north of 40, well, then you've got a good business. On the last conference call, Karp said Palantir's sales growth rate and its operating margin together added up to 81%. 81 is the best in the entire market. Does that mean it's worth 197 times earnings? Not on a daily today. This consulting and data interpretation company, among so many other things, does a huge amount of business with the Defense Department. And we're now hearing chatter that the defense spending could be cut back by 8% in each of the next 5 years. Now, I could make the case that Elon Musk, the head of Doge, might actually appoint Palantir to cut the fat. Or you could easily argue that Congress and the courts will never let the defense budget get cut without an actual piece of legislation. But today that didn't matter, did it? The stock, which had gone up for weeks, gave back a huge amount of money in the last 2 days. Why? Now, some of it was the Defense Department rumor, but some of it was simply that Palantir has gotten too expensive, which is why we're starting to hear chatter about insider selling plans. It actually doesn't bother me, though. See, most of all, what really happened is about the shareholder base that turned tail. Palantir is mainly owned by retail investors who are true believers. They love Karp and his irreverence and his braggadocio about how everyone at Palantir is much smarter than you and I. They think this stock belongs to 1,000, not at 106, where it went out today. Is there some metric to justify that price? None whatsoever. For the owners, the traders, it's all about charisma and brilliance. And take their word for it. They do tremendous work for customers, work that pays off soon after you hire Palantir. Now, most of these kinds of shareholders don't intend to sell, but it gets a little too dicey on days like today and yesterday for most owners. That's because there's another cohort of owners, red-hot mutual funds, who are addicted to stocks like Palantir. There are managers who are mesmerized by things like the Rule of 40. They buy into every cockamamie method of valuation. They have total contempt for those of us who like to have some rigor, some methodology that can make it so you can buy a stock and justify buying more on the way down as it gets cheaper. These managers are not investing. They're simply taking chances. And as long as they do so somewhat wisely with a plan to buy more on the way down while measuring each quarter for the showmanship, well, then maybe they got a winner. But on days like today, let me tell you, they are your worst enemies if you own stocks like Palantir. Because when I see all of these kinds of stocks go down at once, I know that some big-time money managers are bowing out. They've gotten bearish, and they're taking every one of your stocks down with them. Remember, I have no problem with this kind of speculation. I've been telling people to buy Palantir in every dip if they're willing to take the risk, including, by the way, this one. I actually am encouraging you to pick 1 or 2 speculative names, that's all, and own them. Have no illusions. If they don't work, you'll be up speculation creek without a paddle, which is why I don't want to own 5 or 6 of these. Then why am I even countenancing this kind of activity? Well, because when it works spectacularly. Take Amazon. Hard to believe now. But for years, I heard that Amazon was ridiculously overvalued, endlessly. I was willing to go long it after spending some time with them, publicizing Confessions of a Street Addict in 2002. I saw that they could easily wipe out the bookstore industry, maybe even the rest of retail. But I recognized it was speculative. If you had conviction, it made you a fortune. Netflix and Tesla is no different. They looked incredibly expensive the whole time. At certain moments, you had to suspend any sort of sense of rigor or prudence to own the stocks, and you had to hold on for dear life on days like yesterday and today. Most investors I know can't do it, or they do it in options, and now they're done. They're done. They have nothing left. Yet there are some amazing opportunities all over the place if you're patient.
Please leave a like on this video so more people will see it. And while you're down there, please consider subscribing. It's free, and you can always change your mind. Thanks for watching, and hopefully I'll see you in the next video.